Hello, good morning, ladies and gentlemen, and how are you doing today? Let's quickly confirm that we're all on the same page here. So what we are going to be doing is to type in hi in the comment section so that we can get the session started. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so we can get the session started. So I'll be running through the comment section to see your confirmations so that we can get this started. Okay, Lester 6241, thank you very much. Good morning. Meadow 963, good morning to you. Willie 68, thank you. Eva Diana, all right, thank you very much. Aram 2022, okay, thank you. So let's take this as a confirmation that we are all good to go. So I should just start the session right away. So I'm so excited to welcome you to yet another promising session on the Extreme Speed Live Hub. My name is Sheriff Daramola, and the next 1 hour I shall be your host, where I will be taking you on a trading journey, evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it's our culture here in this community that we first of all review all the pairs we have been monitoring since the beginning of the week before we make decision for today. So with that being said, let's dive into the charts. Let's see what is going on in the market right now. And I can see Carrie in the house. Good morning, Carrie. Thank you very much for that confirmation. And the first thing we are going to be looking at this morning is the economic calendar. And the reason why we are going to be looking at the economic calendar is simply because we have major macroeconomic events coming up today. And this is definitely going to be driving price action. So we want to be getting ourselves prepared and see how participants in this market are anticipating that event. And we shall be seeing the reflection of this anticipation on the chart as price action. So what's the first thing we have here today? So the JPP, we are not looking at any JPP pairs for today. We are not looking at anything on the euro, but we are looking at something on the USD. And for the USD, in 2 hours, 30 minutes from now, we have the consumer price index coming up. And there is some positivity in the here. I think the data here has actually changed. The consensus here has changed to 0.3% against what we had yesterday. I think we were seeing around 0.4% yesterday as consensus. So there is not any change here. So let's see what is going to be coming up in 2 hours from now. Then we also have the consumer price index for the year on year, which the consensus has actually reduced their expectation to 6.1%, which is likely going to be as a result of some events behind the scenes. So let's see how this is also going to be affecting the dollar during the New York session today. Then we also have the Tankan Large Manufacturing Index, which is going to be affecting the JPY. Remember, we have been monitoring the USDJPY since yesterday. So we're also going to be looking at how this is going to also affect the USDJPY. So these are the major events that we are looking forward to for today. So we want to be seeing how this event is going to be affecting the price action. So let's dive into the charts and let's see what is really going on in the market right now. So the first commodity we are going to be looking at this morning is the US oil, and matter of fact, we are very profitable on the US oil at this particular point in time. So let's quickly do a review of what our expectation was as at yesterday. So yesterday we had the sell position running after price broke down the $71.50 level. Remember, we had a structure between the $72.50 area and the $71.50 area where price was caught within a tight $1 channel around that area before we witnessed the breakdown of that structure yesterday. So yesterday morning, we took advantage of this bearish momentum, and those who took advantage of this move yesterday, I made mention that we should move our stop loss to either break even or lock in some profit. as there is a tendency that price might likely climb to the upside, and this was as a result of the buy pressure we noticed around the $70.50 level. And this is exactly what happened yesterday. In matter of fact, at the beginning of the New York session, we start seeing buy pressure around this area. And remember, I told you that for those who missed out on this opportunity, that a breakdown of that structure should be giving us a signal that we want to be joining a decline to the downside. And if buyers continue to find buy pressure above the structure, we might be changing our perspective to bullish. So we had a scenario here yesterday where I stated here that if price breaks back above the $71.50 level and we start seeing buying pressure around that area, we want to be joining a bullish momentum from that point. And this is exactly what happened here. Just right around the $71.50 level, we saw a breakout of that structure in our lower time frame, followed by buying pressure right on our 5 minutes time frame, and that was exactly the signal we needed to join that bullish momentum to the upside. And this is exactly what happened here, as since yesterday price action has moved. I actually did not take it right from the $71.50 level, but if you are taking it from the $71.50 level, you will definitely be in over 200 pips in profit right now. And for those who took it around the $72.15 level, you will be in approximately 180 pips at this particular point in time. So for those who took advantage of this move, kudos to you guys for being on standby to take advantage of this move. So the next thing we want to be doing is to protect our position against any sudden pullback that might likely happen at this point. So I will be advising us to move our stop loss to somewhere right below the $73.10 level, lock in some profit there, and let's see how price action is going to be relating to the $74 area. And if you look at the structure we are in right now, we are around the $74 level, a level which has been a major determinant of price action. Let's say since last week's trading session, we have been witnessing critical decisions made around the $74 level. And matter of fact, we saw how this level was holding by pressure at one particular point in time before the breakdown of structure happened here on Wednesday last week. Then we saw another breakout of that structure before another breakdown happened again on that same day. Now, if we fast forward to Thursday of last week, we saw selling pressure around that area. And then during the New York session yesterday as well, we saw selling pressure around that area. Now, during the early hours of today too, though we had a little breakout of that structure, which gave us a clue that there is a tendency that buyers could likely come in from this area. But in the last couple of hours now, we saw selling pressure, which has pushed price right below the $74 level. Now, with the kind of scenario we have right now, there is a tendency that we could be having selling pressure here, judging from the previous the sell memory that we have around this area. So we can see we've been witnessing sell memory around this area since in the last 1 week here. So there is a tendency that price might likely go to the downside from that area. And if you look at how this bullish move took over the charts yesterday, we saw how price broke out of the $72.50 level, and at the same time breaking out of that trend line that we identified at the beginning of this week. Remember, we had this trend line figured out, a trend line which has been holding selling pressure for the last 4 weeks now. Let me zoom out a little bit so we can see what I'm talking about here. So you can see in the last 4 weeks we have been on a bearish momentum, and as a result of this, we had a connection of the lower highs here to give us that resultant bearish trend line. And remember, we have been enjoying this selling pressure to the downside. And though we had a breakout of the structure here on the last day of November, but during the early days of this month, we saw price break down that trend line, and price action has continued to respect that trend line, hereby pushing price to the downside and further emphasizing the strength of the sellers at that particular point in time. However, during the New York session yesterday, we identified a very interesting structure which came in the form of a breakout of the $72.50 level, which also lines up with the bearish trend line we just figured out earlier to give us a bullish signal at this particular point in time. So from a technical standpoint, there is a tendency that we might be having either a retracement back to do a retest of the structure that was broken yesterday to further incite another wave of bullish momentum. That is a possibility we are not going to be ignoring. during the New York session today. And then there is another situation where we could be looking out for a trend continuation pattern around here. It could be a wedge pattern. It could be a bullish rectangular pattern to send price continuing to the upside. So these are the two scenarios we shall be looking forward to today. One is price probably going to come back, do a retest of structure before another wave of bullish momentum happen, or we're going to be looking out for a trend continuation pattern right around the $74 level to incite another wave of bullish momentum. But before we go into the details of what our expectation is going to be like for today, it's very important that we have an holistic view of what is really going on in this market. If the tendency, the structures we have here on our 1 hour time frame still supports a bullish momentum, and if it doesn't, probably it's going to be supporting a bearish momentum. So we want to be getting ready during that decline if that will happen. So in that regard, we shall be scaling up to the daily time frame, and this is also going to be very useful for those who are not part of our live session yesterday, so that you can actually have a peep into how we got to the decision we made yesterday to sell the US, to buy the US oil rather. So we are on the daily time frame right now, and we have a very interesting situation here on the daily time frame where price action has been caught within a consolidation phase just within the $93.50 level, which has been the resistance point of this channel, and the support level at around the $77 area. And though during the course of last week's trading session, we witnessed the breakdown of that structure to signal the tendency that sellers might likely come in from this point. And at the beginning of the week, we had a situation where price was around the $70 level. And what I stated here at the beginning of the week is that there is a tendency that price might likely, whenever we have a breakdown of a structure like this, we expect that one point in time, price is likely going to come back to do a retest of that structure with the intention of continuing in the prior leading price actions direction. So that is one scenario we were projecting at the beginning of the week. Then the other scenario is that we could have a situation where a reversal pattern coming around this area to bring price right back into the $85 level, a structure which was broken during the mid-month of November here. So we saw that significant structure, a level which also shares a confluence with the bullish trend line that has been holding by pressure since, I think, in the last 2 years. So we might be seeing price come back into that structure to incite another wave of bearish momentum, or possibly break out of that structure to give us an opportunity to add more position to our existing trade. So these are one of the scenarios that we were looking at the beginning of the week. And so yesterday now we took advantage of this bullish momentum. So as at yesterday, we had an engulfing candle which took price right out of the $71 zone to give us at this point in time, we should be calling this a retracement of the impulse leg. So we had this impulse leg here. So we might be looking at a retracement back into the structure that was broken last week, probably to send another wave of bearish momentum, or probably to continue into the $85 level. So what we are going to be doing right now is to scale back down to the 1 hour time frame. With the information we have here on the daily time frame, let's use this information to decipher what next our line of action will be. So in that regard, we are going to be looking at how price action is currently relating to the $75 and the $74 area, where we are going to be saying if there is going to be selling pressure on our lower time frame there. So if there is selling pressure around that area, then we might be seeing that as the culmination of that retracement phase with the intention of driving price further to the downside. And if we have a breakout of that $74 to $75 level, then we want to be thinking of adding more position to our buy trade. So right now we want to be scaling back down to the 1 hour time frame, and here we are on the 1 hour time frame. So remember, we had a couple of structures identified here on the 1 hour time frame, and this is one of the structures, and that is the $74 level, which I showed you on the daily time frame, where I said we want to see our price action is going to be relating to the $74 level and the $75 area to decipher if we are going to be selling at this point in time, or we want to be adding more position to our buy trade. So now we have the $74 level figured out, and I think it's appropriate that we also identify the $75 areas for the sake of clarity. So we have the $75 area around here. So in fact, to make things more easy, I will just identify this whole area as a supply zone. As we can see, this level has been holding selling pressure since last week. So for the sake of clarity, we just identify this area, supply zone. Okay. Let me place this right and give this. Okay, I think we are good like this. So, okay, we have a supply zone now figured out at this particular point in time. So going into the New York session today, what is going to be our plan? Well, to sell the US oil at this particular point in time, we might be having a counter trend trade in such a way that this might likely be a retracement of this impulse leg that started this week, where we might see an evolution into a trend, a reversal pattern, probably a double top structure, sending price crashing back into either the 72 or the $71.50 level area, where we want to be looking out for buying pressure to join another wave of bullish momentum. So if this is going to be the case here, well, if you are a counter trend trader or a scalper, you might want to take advantage of that move, which might fetch us a minimum of 140 to a maximum of about 230 pips to catch here if price moves in that direction. So you might want to be on standby for that if you are a counter trend trader or a scalper to take advantage of that move. But if you are not, then I would advise that you remain patient, wait out for price action to come back into that zone area and look out for buying pressure to join the trend continuation to the upside. So that is the first scenario we are looking forward to. Then the other scenario is a situation where price breaks out of the $74 level here. Remember, you can see how in the last 6 to 7 hours here, we have been witnessing some consolidation phase around that area. So there is a likelihood that price might break out of that structure. So if it does break out of that structure, then we want to be seeing that as a bullish signal. And if we are lucky enough, we start seeing buying pressure right above the $74 level here, we want to be adding more position to our existing trade. So to make things a little bit more easier for us for the New York session today, I would like to add one more parameter to further guide our trading activities for today. So what I'll be doing here is to bring out my line chart and then, if possible, find a bullish trend line after connecting the series of higher lows here. So if we look at what has been happening here since the later part of last week's trading session, so we have something like this, which we shall be using. So I will be calling this a temporary bullish trend line at this particular point in time, simply because of the fact that we have been on a bearish momentum in the last couple of months now. So we shall be calling this a temporary bullish trend line. Let's see how price action is going to be relating to this trend line at this particular point in time. So we might be having a situation if price continues to trade above that bullish trend line, which also shares a confluence with the $74 level, then we want to be looking out for buying pressure right above that structure. Then there's another thing I want to share with you here, which after seeing our price action rejected the $70.50 level here, we saw buy pressure around that area, and it gave us a structure in the form of a reversal pattern. So following this impulsive move to the downside, we saw a double bottom structure here where the $72.15 level here served as the neckline of that reversal pattern. So we saw the breakout of that reversal pattern here, of that neckline here at the $72.50 area, which we took advantage of yesterday. And there is a likelihood that price might come back to do a retest of that structure. So if price breaks down both the $74 level and this bullish trend line, the temporary bullish trend line we just identified here, with selling pressure right below the structures, then we might be looking at somewhere around the $72.50 level where price retests the neckline area. Then we look out for buying pressure around that level to join the second wave of that bullish momentum. So like I said, if you're a counter trend trader or a scalper, a breakdown retest of that structure might likely give us an opportunity to sell into the $72.50 area, where we will be looking out for buying opportunity to join the rally to the upside. So, but if price does not come to the $72.50 level, we still want to get ourselves prepared to join the rally if we start seeing buy pressure right above the $74 level. which also lines up with that bullish trend line to join another wave of bullish momentum. And if price breaks out of that structure and price continues to the upside, I will be suggesting that we should be moving our stop loss again into probably below the $74 area. Then look out for, there is a structure here. If you look at the supply zone here, you see, as soon as price gets into this area, we have been witnessing selling pressure from that level. So let me identify that structure so that we can also use it as a yardstick. So this is the peak point of selling pressure here. So if at any point in time during the New York session today, price breaks out of that structure and we start seeing buying pressure right above that level, it's another opportunity for us to add more position to our existing trade. So these are my views here on the US oil, and our take profit target still remains around the $79.50 level. Remember how that level had been holding selling pressure at one particular point in time. If you see what happened here, it was a selling niche for participants in this market. It was a buy niche here before we witnessed the breakdown here on Monday of last week. Then there is a likelihood that price action might come back here to retest that structure. So simply, we want to be having our take profit target between this structure, that is between the $76.50 level and the $80 area, to be approximate here. So let's see how price action relates to the structure. So if we start seeing selling pressure below that level, then we want to be thinking of joining a decline to the downside. And if a breakout of the $79.50 level happens, followed by buying pressure right above that structure, then we want to be adding more position to our existing trade with a take profit target at around the $85 level, a structure which we identified on the daily time frame, which has been serving as a major determinant of price action for like 3, 4, 5 months for now. So these are my views here on the US oil. If you have any questions regarding what I've just explained so far, or you need further clarification regarding the current structure, kindly or feel free to drop your inquiries in the comment section. And obviously, I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions. And if there are none, we'll just move on to the next option. So what do we have here in the comment section? So we have, okay, I see Carrie, all right. Okay, good morning, 603. Lamdell, good morning to you. Glad to have you around. All right, 922, 432, good morning. Steamroller, good morning to you. How are you doing today? All right, glad to have you around. Hope you were able to make profit on your AUDCAD yesterday. All right, so Zidek, good morning to you. Good morning, hi Max, glad to have you around. 587, good morning. Francisco, how are you doing today? Okay, so in the absence of no questions, I want to assume we're all on the same page. So let's get ready for the next option. And the next option we are going to be looking at this morning is the US tech. So on the US tech, we also have a profitable position running at this particular point in time. Remember, yesterday we had a situation running right above the $11,560 level. So remember, we took advantage of that opportunity right around the $11,560 during the early hours of yesterday. Okay, thank you, Max. Very good. Thank you for that confirmation. All right. So we took advantage of that buy opportunity right above the 11,560 yesterday. And one thing I stated here is the fact that for those who had missed out on that opportunity is that let's be patient and wait for price action to come back and do a retest of that structure, followed by buying pressure right above that area on our lower time frame for us to join the rally to the upside. And this is exactly what happened here yesterday. So we had a situation here. New York session yesterday, we had buy pressure right around this area during the New York session, and boom, we had a bullish engulfing candle taking price right out of that structure to the upside here. And as soon as price got into that 11,700, remember how important we said that level is for the last 2 months, 3 months on the US tech. I said if we start seeing selling pressure below that structure, we want to be getting ready to sell. And if price breaks out of that structure and in such a way that we start seeing buying pressure right above the $11,700 level, we want to be getting ready to buy or add more position to our existing trade. And this is exactly what happened here. In fact, during the early hours of today, we saw breakout of that structure. We saw buying pressure. We saw the first touch, second, and third touch here. And it was a very good opportunity to join that trend continuation to the upside. So for those who are taking advantage of both of these positions right here, kudos to you for being on standby. And as currently you will be running with, okay, the first position will be running with over 190 pips in profit, and the second position is going to be running with over 60 pips in profit. So we have these two situations running now. So the next thing we want to be doing here is to protect our position against any sudden pullback that might likely happen at this particular point in time. So we want to be moving our stop loss. I think somewhere around the $11,700 level should be most appropriate to lock in some profit. So that means for the first position, we should be having something like 130 pips. And the second position, that means if it price goes against us, we shall close that second position at break even. So this is what we are looking forward to today. So that is the position right now. So let's see what is happening on the daily time frame. Let's correlate what is happening on the daily time frame with what we have here on the 1 hour time frame. And if possible, we could see structures that will support adding more position to our existing trade, especially for those who missed out on these opportunities that we took advantage of both yesterday and this morning. So let's scale up a little bit to the daily time frame. Let's see what's really going on the higher time frame, further having a perspective of what is going on here. So on the daily time frame, it's very obvious that we have been on a bearish momentum since the beginning of the year. And as a result of this, we had this bearish trend line figured out here. And well, where it got more interesting is when price got into the $11,000 level. And you notice what happened here. As soon as price got into that 11,000 area in the month of June, we started seeing buy pressure from that area, negating all sellers' attempt to push price below that structure. So participants in this market saw this area as a very cheap level to buy the US tech. So we saw the same thing happen here in the month of September stroke the early days of the month of October. And though at the month of October, we saw that this level, the buy pressure though wasn't strong, as we saw that sellers continue to negate all buying pressure around the 11,700, and this made us make the $11,700 level a strong key level that we shall be using for guiding our trading activities. At least in the last 2 months now, we have been using it to guide our trading activities. So now we had a situation here during the first week of the month of November. We saw this engulfing candle which broke out of the hold on a second, let me see. Can you see my screen? I'm trying to use my tools here, but I can't find them. I don't know why. Okay, I guess there are some technical issues from the chat service provider. Yes, okay, so we have it. So like I was saying earlier, we had this engulfing candle which took price out of that demand zone from the $10,500 level, which we saw this move break out of the $11,700 level. Remember how that level has been a strong selling niche, but as soon as price broke out of the 11,700, price was caught within a consolidation phase between the 12,090 and the $11,500 area. So we had a flat channel here. When we have a flat channel coming out from an impulsive move, a bullish impulsive move, we want to be seeing this as a trend continuation pattern. And if we look at what has been happening here since the first week of the month of November, we saw how the 11,500 level has been holding by pressure. So as soon as price gets into that structure, we see that buyers come in to push price to the upside. The same thing happened here on the last day of the month of November, stroke the early day of December. We saw buy pressure here, and during the course of last week trading session 2, we saw buy pressure from that area. So at the beginning of the week, we saw another buy pressure right around this area, and that is why we took advantage of that buy opportunity here. And so we are looking at how that level is going to continue to hold buy pressure at this particular point in time. And what we see here during the early hours of today is a breakout of the 11,700. So at this point in time, it appears the bullish momentum is getting stronger. So, well, for me now, with the current structure we see here, I would like to extend my TP a little further into the $12,000 level, hoping that price will continue in that direction. And you can see, if possible, you can move it to as far as the 12,100, a level which also lines up with this bearish trend line, which has been holding certain pressure since the beginning of the year. So we see how price relates to that structure to decide if we are going to be adding more position to our existing trade, or we're going to be seeing certain pressure below that structure to further incite another wave of bearish momentum back into the $11,500 level. So now we want to be scaling back up into the 1 hour time frame. Let's see how participants in this market has been relating with the $11,700 level. Then we use the structure we have there to decide if we can add more position to this trade. And if we are lucky enough, those who missed out on these opportunities could have another opportunity to join that potential rally to the upside. So I will be scaling down to the 1 hour time frame here. So here we are back on the 1 hour time frame. So we already saw a breakout of the 11,700. Let me bring this out a little further so that we can see it clearly. So we have the $11,700 level here. It's found around this level. Okay. I just want to be more precise as possible. Okay, so we have the 11,700 here, and price has continued to climb to the upside. And make sure you have moved your stop loss accordingly, which, like I said earlier. So what I'll be doing here is to bring out my line chart. Then I want to be connecting the higher lows here, since on the 7th of December, I hope I'm correct here. So we should be having something like this. We should have a structure like this to guide our trading activities for today. I'm not sure which is more precise here, this one or this one. So let's see how this is going to. So we have two trend lines here. So let's see which one fits the current structure most. So either one, we can use either one anyways. So what I'll be doing here is to look at the structure here. So we had an impulsive move to the downside from the 12,090. We saw reversal pattern. We saw the first touch. Price tested 11,700. We saw the second touch here. So we have something that looks like a double bottom structure, where the somewhere around 11,700 is serving as the neckline of this current structure. So now going into the New York session today, let's see if let me bring out my line chart here, and then we look at this area. I would like to give this a blue color to differentiate it from my other structures here. So let's use 11,750, a very good psychological level. 750. I'll give it a blue color as well. All right, so we have the situation running. So for those who had missed out on the buy opportunity we took yesterday and this morning, so what I'll be advising us to do here is to remain patient and wait out for a breakout retest of the structure to join or add more position if you are already in this trade. So looking out for a breakout retest of that structure. So we shall be looking at something like this, breakout of that structure. You can see that same level also shares a confluence with the trend line we just identified earlier. So if we see our price breaks out of that level, and if we are lucky enough, we start seeing buying pressure right above that structure, then we want to be adding more position to our existing trade. And at the same time, if you are not yet in this trade, it's an opportunity to join the trend continuation to the upside. So these are my scenarios here on the US tech. If you have any questions, feel free to drop your inquiries in the comment section. Now, in as much as we are looking out for buying opportunity on the US tech, we should not also ignore the possibility that price might likely find reversal patterns around this structure. And the reason why I have said this, oh, hold on, I don't know what, okay. The reason why I have said this is simply because of one, there is one here. We saw the breakdown of the 11,750 here last week. Then during the later part of last week trading session, we saw a rejection of this level by the sellers pushing price to the downside. So that area has a tendency for sellers to come in at a particular point in time. So if sellers selling opportunities come in here, then we also want to get ready for that. So for me, what I'll be suggesting is that if sellers come in and then we see a breakdown of the 11,700 followed by selling pressure below that 11,700, we could be having an opportunity to join that decline to the downside, having our take profit target sitting around the $11,500 level. But for now, I'm not sure this is going to happen. But if it does happen, we want to be prepared to take advantage of that move as well. So that is my view here on the US tech. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. All right. 679, thank you. 675. All right, good morning. 16421 stores to treat Euro USD. I'm not sure that is going to be possible, but let's see what time will be left after taking on all the pairs we have been monitoring since the beginning of the week. Okay, if there are still time, I will try to squeeze that in my analysis for the session. Okay. All right. So in the absence of no questions, let's move on to the next pair. So the next pair we are going to be looking at is the USDJPY. And on the USDJPY as well, we have been on a profitable trade since yesterday on the USDJPY. Remember, we had this opportunity here. Hold on a second. Remember I told you I bought this right above the $136,700 level. And one thing I stated there yesterday is that if price comes back to that area and we start seeing buy pressure right above that structure, we want to be joining that rally to the upside. And that was a very good opportunity for us to join that rally. So the first position we took advantage of here, if you are already in that trade, you will definitely be in about 93 pips in profit at this particular point in time. Then in addition to that position there yesterday, I also stated here that if price breaks out of the 137.150 level, that is if we see a breakout retest of that structure, which is exactly what happened here during the later part of the New York session yesterday. And then it was another opportunity to add more position to our existing trade. So at this particular point in time, we also added another opportunity to our existing trade here. And if you are taking that as well, you will be having around how many pips in profit? Around 50 pips in profit at this particular point in time. So if you are taking the two positions, you will currently be running with over 830 pips. So that is a very good position for us, at least the second day of the week. Running with over 830 pips on the USDJPY is not a bad thing at all. So the next thing we want to be doing here is to move our stop loss. Let's lock in some profit. And I will be suggesting that somewhere around the 137.430 level should be an area we shall be locking some profit here. I think 137.410 should be a very good area for us to lock in some profit at this particular point in time. And the reason why we are going to be locking some profit here is simply because of how that we've been noticing selling pressure around the 11,000. Let me see. 11,000. Okay, 137.700. So we have been witnessing selling pressure around this area. Hold on a second. Let's use our line chart for specific points of connection. So, okay, I will prefer using the 137.650. So let's label this area for the sake of clarity. So we have the 137.650 level here. So as soon as price got into the structure, remember, we have been witnessing selling pressure here as well during the last week trading session on Wednesday last week. We saw selling pressure around that area. And as soon as price got into that structure, into that level, we have been witnessing a consolidation phase around here, which is characterized more with selling pressure, as you can see the wick around this level. Now, if I zoom out further so that we can see things very clearly here, we can see that as soon as price broke down the 138 Japanese yen level here a couple of weeks ago, price comes into this area. We saw selling pressure. Again, we can see price is right back at that area. We saw selling pressure again from that level. So we should be getting ready if sellers is going to be taking over this market. So now that we have this perspective in place, like I said, let's move our stop loss, lock in some profit here accordingly, and let's see how price action will play out. If price is going to continue to the upside from the above the 137.6, if we are going to be seeing buying pressure above this level, then we might want to be adding more position or wait for price action to break out of the 138 Japanese yen level, taking out all the sell position around this area to further confirm that the buyers have come here to stay. So if that happens, then we want to be adding more position to our existing trade. Well, before I go into the details here, it's appropriate that we scale up to the daily time frame. Let's see what is happening on the daily time frame. If the structure we are going to be seeing from an holistic perspective will still be supporting a bullish momentum, or we're going to be getting ready to join this decline to the downside. So in order to do this, we'll scale up to the daily time frame. So what do we have going on the daily time frame? Well, on the daily time frame, we identified the fact that price action has been on a long-term bullish momentum here. At least since the beginning of the year, we have been witnessing this bullish momentum, and this is evident after connecting the series of higher lows here to give us that resultant bullish trend line. However, we had a breakdown of the trend line here during the mid-month of November, which pushed price to the downside to the 135 Japanese yen level. And remember how important, how significant we said this key level at the 135 Japanese yen is. And look at what happened here in the month of August. We saw a reversal pattern here sitting right on top of the bullish trend line in the form of a double bottom structure. And whenever we have a reversal pattern like this, we want to be having a neckline area which shall be serving as our yardstick for trading activity. So the breakout of the neckline area was a very good signal that we should be going bullish here. And we went bullish here in the month of August. And in matter of fact, it took about 3 to 4 months for price action to come back and do a retest of that neckline. So see what happened here as soon as price got into the neckline area. We started seeing buy pressure from that area. Remember, we took advantage of this move last week, which gave us over 500 pips in profit. And we have seen price has continued to find higher lows from that structure. So we saw the breakout, price came back, did a sharp rejection of this level, and we find ourselves around the 137.500 level. Now, we are right at the 137.500 level. We saw this area I showed you on the 1 hour time frame where we saw selling pressure from that same level. We saw that price is right back at that structure here. So is sellers going to have a say here, or is buyers going to break out of that structure to give us another opportunity to add more position to our existing trade? And if you look at the structure at the 137 point, I am trying to see where is most suitable for us to place a key level. I think 137.700 is most appropriate here. And if we take it back to as far as the month of November, we can see how that level also has been serving as a determinant of price action. So we have the 137.700 here. If we look at what happened here in the month of November, we saw buy pressure from that same level. We saw buy pressure again in the later part of the month of November before the breakdown of that structure here happened. Price has been retesting that structure. Now we are right around that structure here, and you would agree with me that this is a very critical point we are in right now. For the sake of clarity, I would like to label this area so that we can have a visual understanding of what we are talking about here. So we have the 137.700 where price is right now. So for us to see for the confirmation that our buy position is very, very good, we want to be seeing price break out of the 137.700 level, where we start seeing buying pressure around that area on our lower time frame, probably of 15, 10 or 5 minutes time frame. Buy pressure right above that structure, then we are good to add more position to our existing trade. So our take profit target still remains around the 142, 143 area. Remember this bullish trend line here, which was broken in the month of November. So there is a likelihood that price might come back to do a retest of that structure before another wave of bearish momentum happens, or probably break out of that structure to signal another wave of bullish momentum here. So let's scale back down to the 1 hour time frame. Let's see what is really happening around the 137.700. Let's see how participants are relating to the structure. And if we start seeing consolidation phase around that area, then we should know that participants are waiting for a catalyst in the form of a macroeconomic event to bring more liquidity into the market to drive price action in whatever direction it wants to go. And if we look at the economic calendar here, we have a couple of events we are anticipating for today. We have the Tankan Large Manufacturing Index, which is going to be affecting the Japanese yen. Then we have the Consumer Price Index, which is coming up in 2 hours from now, which is also going to be affecting the dollar. So we can see that participants are actually anticipating that event, and this is coming in the form of a consolidation phase around the $137.700 level. So right now, we shall be scaling back down to the 1 hour time frame. Let's look at how the structure at the 137.700 level is doing in respect to the current price action. So I will readjust this to the 137.700 so you can fit into the current structure we have here. So I would like to relabel this 137.700. So that's the structure we are going to be looking out for, guide our trading activities for today. So if price trades below that structure, following the sell pressure we have been witnessing here in the last 16 to 18 hours now, then we might be seeing that as a retracement of this impulse leg. So remember, we had this impulse leg that started this week. So if selling pressure continued to oscillate below the 137.700, then we might be seeing this as a retracement phase back into the bullish trend line, or probably the 137.150 level, where we shall be looking out for buy pressure to join the trend continuation to the upside. So if you are a counter trend trader or a scalper, you might want to take advantage of selling pressure if price breaks down the 137.700 and selling pressure continue below that structure on our lower time frame. Then you might want to join that decline, which might probably be giving about 50 pips there, about not bad anyways. Well, but if you are not a counter trend trader or a scalper, or a long-term trader like me, then I would advise that you remain patient. If price falls below the structure, wait out for price action to come back within the structure here, which also shares a confluence with this bullish trend line here, to be thinking of buying the USDJPY. However, if price breaks above the $137.700 level and we start seeing buying pressure right above that structure, then we want to be thinking of adding more position to our existing trade. Now, in order to make things a little bit easier for us during the New York session today, there is another structure I was able to identify here, and that is after connecting the lower highs here. So we had the structure here. I'm not sure if we have a linear one here, because there's another one around this level here, which we can be using to guide our bullish momentum. So we want to see an outright breakout of the structure to give us a signal. Remember, move your stop loss according, lock in some profit here. So we want to see price breakout of the structure followed by buying pressure right above this level. Then we want to be adding more position to our existing trade. And if price breaks out of the 138 Japanese yen level, and then we start seeing buy pressure right above that structure, we want to be adding more position to our exit trade. So our TP target still remains between the 139.00 level and the 139.650 level on the USDJPY. So let's see how price action plays out in the next 24 hours. We shall be coming here tomorrow to review this and add more insight to whatever structural price action evolves into. So the next pair we are going to be looking at today is the XAUUSDs. Mind you, if you have any questions, feel free to drop your inquiries in the comment section as we continue with our analysis here. So on the XAUUSD, we've also been in a profitable situation here on the XAUUSD, as we were able to join the sell momentum at the beginning of the week, right below the $1,797 level here. we took advantage of this opportunity as price continued below the $1,800 level. And one thing I stated here yesterday for those who had missed out on this opportunity is that we wait for price to come back into our golden zone area where we look out for sell pressure to join that decline to the downside. And this is exactly what happened. Price came back around this level. We saw another opportunity to join the decline to the downside. And I also had it here yesterday that if price breaks down the structure at the 1,785, taking out the buy positions here, we want to be adding more position to our existing trade. So in matter of fact, yesterday, below the structure, we had price move over 700 pips, 800 pips thereabouts in our favor before we started seeing momentum happen. I hope you are able to lock in some profit before price action takes us out of that position. And for those who are taking this position since the beginning of the week, right below this level here, you will currently be running with over 1,200 pips in profit. And I hope you have moved your stop loss accordingly to lock in some profit here. Now we are heading into the New York session today. How do we intend to trade the XAUUSD? Well, we have a couple of scenarios to look out for. Well, the first one is the 1,785 level, which we identified yesterday. That level still remains valid as we head into the New York session. As if we continue to see selling pressures below that structure, we want to be thinking of selling the XAUUSD or adding more position to our existing trade. And in addition to the 1,785 level here, to make things easy for us during the New York session, I was able to identify this trend line, which I will be calling a temporary one in the meantime after connecting the series of higher lows here. So we saw what happened here during the later part of the New York session yesterday. As soon as price got into the $1,780 level, we started seeing buy pressure, a uniform one, and as a result, we connected that higher lows together to give us that resultant bullish trend line, which I said I will be calling a temporary one at this particular point in time. So what we want to be seeing is if price breaks down that trend line, which also lines up, if price action breaks down that trend line, which also lines up with this $1,785 level, then we want to be seeing this as a bearish signal, after which selling pressure below that structure on our lower time frame will give us further confirmation that we are good to go selling the XAUUSD. And if a further breakdown of this trend line happens, we're also good. And a breakdown of the $1,770 level, like I said yesterday, we are also, why is my levels this long? So I will try to bring it into the size of the screen. So we have the 1,770. So if price breaks down the 1,770, we want to be added more position to our existing trade. So if the sell positions here continue, we can see that we have a tendency of having multiple entries on the XAUUSD. So that is one scenario we are looking forward to here. Then the other scenario is if this bullish trend line continues to hold buy pressure in such a way that price continues to the upside, we also want to be getting ready to join that rally to the upside. Now, if that happens, what we are going to be looking out for is a breakout of the structure. So we have a structure here at the, hold on a second, 1,789, I guess. $1,788.50. Uh-oh, what happened here? Oh my God. All right. Okay. Sorry about that. So we have the 1,788.50. So 1,788.50 cents. Okay, so if we have a breakout of that structure, then I might be seeing that as a counter trend opportunity to take advantage of a bullish momentum with a stop loss below the previous structure, and we should be having a take profit target around the $1,800 level. In the meantime, remember how the $1,800 level has been a major selling niche for participants in this market in the last since the beginning of this month. So we might be looking at that area for our take profit target. So we have a minimum of about 1,100 pips to a maximum of about 1,700 pips to catch here if price continues in that direction. Then in addition to that also, if we look at this impulsive move to the downside, we might be having a situation where price might likely come back into our sell window here, which is an area between the 50 and the 78.6% of this previous impulse leg. And if price gets into the structure and we start seeing selling pressure around that area, we want to be getting ready to sell the XAUUSD. While we lock our profits on the buy position, we might take advantage of right above the 1,788.50 level. So these are my views here. And if a further breakdown of the 1,788.50 happens, we want to be adding more position to our existing trade. So let's continue to monitor price action here. And for those who have been joining us since the beginning of the week and those who took advantage of this move right around the 1,794, kindly move your stop loss accordingly. Well, for me, I will be suggesting somewhere around the 1,790 level to lock in some profit here, and let's see how price action will play out from that point. So that is my view here on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. So I can see Kairu Karim, good morning to you. Just 10, good morning. 2260, good morning to you. 870, good morning. All right. I can see 260 several times here. Hope you're doing well. Okay, Jojo, good morning. All right, in the absence of no question, let me quickly take on the last pair for today, which is the AUDCAD, which Steamroller introduced us to yesterday. So let's see what we have on the AUDCAD. I hope Steamroller is still in the house here. And lo and behold, price action moved just as expected on the AUDCAD. So remember yesterday we had a couple of structures that we were using to guide our trading activity. And the most important structure which we identified yesterday is the 0.92550 level. And one thing I stated here yesterday is that if price continues to trade below that structure, we want to be looking for opportunity to sell the AUDCAD. And this is exactly what happened here. And for those who took advantage of this move right below the structure, kudos to you for being on standby, as you will currently be in about let's see, 40 pips in profit. And if you are taking your profit here, you will be in about 70 pips in profit. Now, we had a breakdown of that structure here, which lines up with a temporary bullish trend line. We also had a retest of that trend line here, which was another opportunity to add more position to this trade. Then price came back down here, and then we had another retest of the 0.9220 level, where I will be suggesting that selling pressure around below that structure will further give us an opportunity to add more sell position to our existing trade. And if price breaks down the 0.91950 level here, and we start seeing selling pressure right below the structure here, we want to be adding more position to our existing trade here on the AUDCAD. So our TP target still remains around the 0.91100 level, and let's continue to look out for let's continue to look out for more selling pressure right below that structure. And if price gets into this trend line, we look out, we move our stop loss accordingly, lock in some profit, and let's see how price action will relate to the structure. If a further breakdown happens, then we want to be adding more position at the site of selling pressure right below that structure on our lower time frame. So these are my views here on the AUDCAD. It's a very simple setup. I hope you be on standby to take advantage of that move when it finally happens. Now, in addition to the current structure here, in as much as we are looking for selling pressures here, we should not also ignore the possibility that buyers could actually come in from this level. So if I scale a little bit higher into, let's say, the 3 hours time frame, or is it the 3 hours? Okay, let me use the 3 hours time frame at this particular point in time. If you look at the structure here, remember we identified this demand zone after identifying buying pressure around this area in the month of October. Then we had this bullish trend line figured out after connecting the series of higher lows here. And as you can see, since the second week of the month of November, price action has continued to respect this trend line uniformly well. And one thing we stated here yesterday was that if price breaks down that trend line, then we might be looking forward to another opportunity to add more position to that trade. But if price climbs above this trend line at this particular point in time, there is a tendency that price might likely continue to the upside. So what we are going to be looking forward to above the 0.920 level on our lower time frame is buy pressure. So we have the 0.922 level here, which lies exactly up with the bullish trend line we just identified now. So we can see selling pressure right below that level, and we can see attempt by the buyers to try to break above that structure. So if a breakout of that structure happens, and then we start seeing buying pressure right above this level, also above that bullish trend line, then we might be getting ready to join that bullish momentum. So if price takes us out of our sell position, we continue to look out for buy pressure right above that bullish trend line. So these are my views here. So in as much as we are looking for selling pressure, don't let us ignore the possibility that buyers could actually come in, considering the fact that we have been on a long-term bullish momentum on the AUDCAD. So the 0.9220 level is a very critical level that we shall be using to guide our trading activity for today. So below the 0.92200 level, we are looking for selling opportunity, and a further breakdown of the 0.91950 should give us a leverage to add more position to our existing trade. However, if price breaks above the 0.92200 level with buying pressures right above that structure, we continue to look out for buying opportunity, and then continue think of adding more position if price breaks out of the 0.92800 level or the 0.9300 area. So on this note, I want to call it a day here. But before I drop the curtain for this live session, let's quickly do a recap of what we talked about today, especially for those who missed out from the beginning of the session. So let's quickly have a quick look at what we have discussed so far. So on the US oil, what is our expectation on the US oil? So we have a situation running here where we are in profit on the US oil. And since price tested the $74 level, we have been witnessing selling pressure from that area. And I told you that there is a likelihood that price match on my started retracement phase below the $74 level. So we might want to be on standby to take advantage of that move. So like I said, if you are a counter trend trader or a scalper, you might want to take advantage of that bearish momentum. Remember, we had the breakout of the structure here, and price might likely do a retracement back into probably the $72.50 level, the $72.15 level area, or probably this trend line here, after which we are going to be looking out for buy pressure to join the second wave of bullish momentum. So for those who are taking advantage of this opportunity here yesterday, I've told you to move your stop loss accordingly, lock in some profit here so that we don't get caught up in a loss position when price drops to the downside. So to make our job easier during the New York session today, I was able to identify this temporary bullish trend line after connecting this series of higher lows here. So we have price continue to respect this level. So if a breakdown of the structure happens, this will might further confirm that a retracement phase has come to stay. And remember, we identified this double bottom structure here, where the $72.15 level serving as a neckline that was broken yesterday. So there is a likelihood that price might likely come back to do a retest of that structure before another wave of bullish momentum happens here. Now, if price does not drop below the trend line and instead price continues to climb to the upside, I have stated here that above the $74 level, if price breaks out of the $74 level, and if we scale down to our lower time frame and we start seeing buying pressure right above that structure, we might want to add one more position to our existing trade. Or if we have a trend continuation pattern here, which might likely evolve into probably a rectangular pattern. So whenever we see a bullish rectangular pattern, a breakout retest of that structure will be giving us a confirmation to add more position to our existing trade. So let's see how this is going to play out during the New York session today. TP target still remains between the $76.50 and the $80 area. Now, moving on, we talked about the US tech. On the US tech also, we are profitable on the US tech as we took advantage of a buy opportunity here. In fact, the market gave us several chances to join this bullish momentum, and we took advantage of this move right from that area. We also took advantage of the breakout retest of the $11,700 level, give us a very good profitable position here. So we have a total of, the first one is giving us about over 200 pips, and the second position is currently giving us about 70 pips in profit. That's over 270 pips. So I've told you to move your stop loss accordingly, lock in some profit here, and let's see how price action will play out afterwards. Then another thing I stated here for those who had missed out on this opportunity is the $11,750 level, which I'll be guiding us to add more position. And for those who are not in the trade yet, give us an opportunity to join a potential rally from there. So what I'm looking out for is a breakout of the 11,750. Then we scale down to our lower time frame, look out for buy pressure on our lower time frame right above the structure. Then we could be adding more position to our existing trade. So we also have this trend line here after connecting the series of higher lows here, which has been guiding this temporary bullish trend line. So what I'm saying is price breaks out of both the 11,750 and the trend line here to give us a signal. Look out for buy pressure on your lower time frame to give us that leverage to join a trend continuation to the upside. So School Cooler is asking what trade am I talking about right now? I'm talking about the US Tech option. So US Tech is right here at the top left corner of your screen. You always see the instrument I am talking about. So the top left corner of your screen, you always see the instrument I am talking about. So that is that. All right, so that is that on the US Tech. Then I also told you that despite the fact that we're expecting a bullish momentum here on the US Tech, we should not ignore the possibilities that sellers might likely come in from this area. So if sellers are going to come in, what are we going to be looking out for to be able to join that sell position there? So like I said, I want to be seeing price break down the $11,700 level. Remember how important that key level is on our daily time frame, a level which has been holding selling pressure for over 2 months now. If a breakdown with selling pressure right below that structure on our lower time frame happens, then we might be seeing that as a signal to join a sell momentum. But I doubt if that is going to happen based on this current structure. But if it does happen, we want to get ready. We want to be on standby to take advantage of that move. Then we went on to talk about the USDJPY also. And in fact, USDJPY too has been profitable for us, as currently we are running with over 130 pips in profit with 2 positions running right now. We took a position right above the 136.700, and we also took another position right above the $137.150 level. Now, to make our job easier during the New York session today, I was able to identify a structure at around the 137.700 level, a level which has been a selling niche last week, and at one point in time it was a buy pressure in the month of November. So we want to see how participants in this market will be relating to the structure, and as you can see here, as soon as price got into this level, we have been witnessing a consolidation phase in this market, further emphasizing the strength of the indecision in this market. So what this simply means is that participants in this market are actually waiting for a catalyst that will drive price action in the form of a macroeconomic event, which might bring in liquidity into the market to drive price action. And when we look at the economic calendar today, we have 2 macroeconomic events, in fact 3 macroeconomic events coming up today that will obviously have an effect on both the USD and the Japanese yen. So we have the Tankan Large Manufacturing Index, and we also have the Consumer Index, Price Index coming up in an hour from now to be affecting both of these pairs. So let's see how price action plays out. But one thing I know for sure is that the breakout of this channel is going to be a huge one. So what I'm saying here is if price breaks out of the channel of this structure to the upside, that is the 137.700, and we start seeing buying pressure above that structure, I want to be getting ready to add more position to my existing trade. However, if selling pressure continues below the 137.700 level, I will see selling pressure, then this might likely be a retracement of that previous impulse leg that started this week back into either the 137.150 or the bullish trend line here, where I will be looking out for buy pressure to join the second wave of this momentum. So I wish we be on standby so that we can take advantage of any of these opportunities that comes in during the New York session today. Then we went on to talk about the XAUUSD. Okay, so we talked about the XAUUSD here, where we have been on a sell position since the beginning of the week. And for those who are taking advantage of this move right from the beginning of the week, we have currently been running with over 1,000 pips in profit right now. And I've told you to lock your profit accordingly. which I said around the $1,790 level seems most appropriate to look out to lock in some profit around that area. Then going into the New York session today, I said, are we going to be continuing with the selling momentum, or is price going to climb up to the upside? So I have identified two structures here that we shall be using to guide our action. So if we are going to be selling the XAUUSD, we have this trend line, which I will be calling a temporary bullish trend line in the meantime, considering the selling pressure we have been witnessing since the beginning of the week. So after connecting the series of higher lows here, we had this trend line figured out. So what I said here, for us to sell or add more position to our sell position, is to see price break down this trend line. And if you look at this closely, you can see that the trend line here also shares a confluence with that structure at the $1,785 level. So if a breakdown happens and we start seeing selling pressure on our lower time frame, it's a good way to sell or add more position to our existing trade. However, if price breaks out of the $1,788.50 level, that is, you can see how we have been witnessing buy pressure since price tested the 1,799. So this bullish trend line has a tendency of inciting a bullish momentum. So if it does, we want to be getting ready. We want to be on standby to take advantage of that move. So we have a structure figured out here at the $1,788.50 level. If price breaks out of the structure with buy pressure right above that level, we want to be joining the rally to the upside. So for the buy momentum here, if a breakout of the $1,788 happens, we want to be having our take profit target within the $1,800 and probably the $1,810 level, somewhere around here, an area which has been a selling niche since the beginning of this month. So we have been witnessing selling pressure around that area since the month of November began. So if price breaks out of the 1,788, look at that area as our take profit target. So while we are joining this bullish momentum to the upside, price will have taken out our sell position with about 1,000 pips in profit. And if price continues to the upside here, we move our stop loss accordingly to lock in some profit. And we have a sell window here, which is a result of a retracement of our previous impulse leg. So we are expecting that this move that buyers are pushing right now might likely be a retracement of that impulse leg. So if we join this counter trend opportunity, and as soon as price gets within the 1,795 and the $1,805 level, and we start seeing selling pressure around that area, move your stop loss for your buy position accordingly, lock in some profit. Then you want to be getting ready to sell the XAUUSD. So we think if a reversal pattern is identified there on our lower time frame, then we want to be selling the XAUUSD to the downside. So we have a couple of scenarios there. I hope you are able to munch my screen so that you can use it as a reference point whenever you're about to take your own make your own individual decision. Then we went on to close the day with the AUDCAD here, and on the AUDCAD we have been profitable on the AUDCAD as price action broke down the 0.922500 level that we talked about yesterday, and price went to the downside. And a matter of fact, we had the possibility of having two positions running here. After price broke down that temporary bullish trend line, retested it, it was another opportunity to sell the AUDCAD. Now going into the New York session today, the 0.92200 level is going to be a yardstick for trading activities for today. So what did I say about this structure? I said if price breaks out of the structure, remember we identified this trend line on the daily, on the 3 hours time frame, a line which has been holding bullish pressure since the beginning of the month of November here. So the bullish trend line has a tendency of still holding buy pressure here. So the 0.922 level shares a confluence with that bullish trend line right now. So what I said is if price breaks above that structure with buy pressure above this level on our lower time frame, we want to be getting ready to buy, hereby taking us out of the sell position, and we look out for price breaking out of either the 0.928 level or the 0.9300 level to add more position to our existing trade. And if price gets into the structure and we start seeing selling pressure around that area with reversal patterns on our lower time frame, please, you can also get ready to sell from that area. Then the other scenario I stated here is the 0.922 level here. I said if we start seeing selling pressure below the structure here, then we want to be thinking of adding more position to our existing trade while we move the stop loss of our previous position to that area. Then if price further breaks down to 0.91950 level, a retest of structure with selling pressure on our lower time frame should be giving us another opportunity to add more position to our existing trade. So these are my views here on the AUDCAD. I hope I was able to simulate all the possible scenarios that might likely happen during the New York session today. My hope is that you'll be on standby so that you can take advantage of these moves when they finally happen. I really appreciate every single one of you. It has been a wonderful moment with you guys. Okay, school cooler. Okay, you're welcome. All right. So I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to analyze the financial market as we get ready for the New York session tomorrow. Remember, we're not getting too excited. Trading is not an exciting business. It's a very boring business. We don't want to get too excited when we sight a signal. We want to wait for confirmations to happen. And what's our confirmation? Retest of structures. Retest of structures. When we scale down to our lower time frame, like the 5 minutes, 10 minutes, or even your 3 minutes time frame, look out for retest of structure. Look out for buying pressure or selling pressure, depending on the direction where the breakout has happened, to be comfortable in joining that potential opportunity. So see you tomorrow, guys, and do have a wonderful evening. Bye-bye.